Now we're on both. Market Monday, 12/15/2025. We got 2 more weeks to 2025, and then we're on to 2026. You know, year of the 9. Let's see if crypto is done with its cycle and hopefully starts the craziest bull market we've ever seen. Yeah. But check it out. So right now, the crypto fear and greed index is at all-time highs. It's at fear. It's at fear. We're out of extreme fear, but the market is still kind of in this weird patch of there's some fear in the market, right? So you might be feeling it. I might be feeling it. Mass Destiny might be feeling it. Trucker Ruben might be feeling it. We all might be feeling a little bit of this fear, right? Like, is the market done? Is it the end? Is this when the rug is pulled from underneath us? You can see last month we were in extreme fear. We were even lower, and it was even more fearful. And you got to be very careful about where we're at on this chart, because I will tell you, it's all about the narrative, right? And the narrative is very strong at extremes. So during extreme greed or during greed, the narrative is always going to convince you that crypto is the best thing since sliced bread, and we're going to go to 1 million. We're going to go to even past all-time highs, this and that and the other. And when we're in the area of fear and extreme fear, especially when price is following it, right? That's when you get the worst narratives out there, right? So you have a lot of legacy OG investors getting bearish. You got a bunch of FUD on Michael Saylor. Is he getting liquidated? And you just have it's like the news follows price, right? You have to ask that question. And this was one of the things in that book that I read with you guys a few weeks back, The Reminiscences of a Stock Operator. It was like, I think it was even in the prelude or something, but it was talking about the author's job as a stock analyst or like a news reporter, right? And sometimes they had trouble. Was the news following the price, or was the price following the news? And that was just like this kind of dilemma that we're usually in. It's like, well, is the market moving down because of the news, or is the news getting more negative because the market's going down? And we're reasoning beings, right? We're always trying to find reason and what's justifying this thing that's happening, right? And again, it's usually it comes down to expectations, our projections, what's going to happen next week, what's going to happen the week after, what just happened, how can we take that information, price it in, right? And all of that. Long term, I mean, everything is there for explosive crypto rallies. You got JP Morgan tokenizing things. You got BlackRock saying tokenization is the next frontier. You got a whole bunch of crypto ETFs launching, right? Like fundamentally, the space is only getting ahead. It's just that right now we're in that short-term noise where it's very important to be on the right side of the market, right? And not over leverage yourself or really know when to be in and out and kind of do this thing like a surfer or a glider would, But you can see this is particularly what the market is kind of fearing right now, is the Japan rate shock is hitting AI, right? Because NVIDIA currently is down, and NVIDIA is the biggest stock in the world. So when NVIDIA is down, everything is down. And there's this kind of fear around that, right? Now, if you zoom out and you look at NVIDIA's chart, I mean, it's just a blip where we're at. I think we're down maybe somewhere between 10 and 20%. It's not the biggest drawdown that NVIDIA's had, but it is bringing everything down in the market along with it, being the biggest stock, right? And you can see that's because next week, I think it's next week or this week, but I think it's next week, the Bank of Japan is expected to raise their rates. Now, the problem with this is something called the Japan carry trade. And that's that Japan has been at 0% interest rates for decades. And what people were doing was borrowing money from Japan and investing it into U.S. Assets, right? Because the U.S. paid more interest. The U.S. stock market, they would borrow money for zero in Japan, and they would take that money and pour it into the stock market. And it was a multi-trillion-dollar carry trade, right? You're going to borrow in one currency, you're going to invest it in the stock market in the other. And last year in August, we saw a surprise from the Japan Central Bank where they raised rates and the market wasn't expecting it. And we had a huge sell-off in the market, right? Now, right now, a lot of fear is on the street right now that as soon as Japan raises rates again, that there's going to be another deleveraging event in the market, and the market is bracing for that, right? You can see BOJ is said to see hiking cycle likely extending beyond 0.75%. Bank of Japan set to hike rates to 30-year highs. 30-year highs. That's a lot. That is a lot. 30 years ago, the U.S. was at, I don't know, 5 to 10% interest rates, right? So Japan has kind of been this odd duck that's had 0% rates for a very long time, or very cheap rates for a very long time. Now, the question is the market really going to sell off? I don't know. But I did have a client who was so scared about it, they paid down all of their loans. They decided to not risk it for the biscuit because an influencer that he saw said that with 100% guarantee that the market was going to crash by 80 or 90% as soon as Japan hiked its rates, right? And I think that's a little bit sensational. And I don't think it's rooted in too much, let's say, common sense, right? Because if the market really does see this coming, well, you would have already seen the moves unfold in advance to that, right? The market is a discounting mechanism, and it's not stupid, right? So in my belief, which, I mean, it doesn't matter what my belief is, right? You shouldn't be investing based on my beliefs. You should be investing based on your beliefs and insights, or your analysis. But, you know, our algorithms don't care what the Japan central bank is going to do. I personally think that a lot of this leverage that's been in this carry trade has likely already been unwound in the past months, and basically ever since it happened the first time, right? So I do think that there's a level that this is very overblown. But the market, again, it's sensational. It's extreme. It's going to scare you. And that's the whole point of the market, is to, you know, get as much emotion, whether it's euphoric or fear, into the market as possible. Okay? And we have a very high risk week ahead of us. So yeah, it's going to be this week that the BOC policy rate happens. You can see that's going to be on Thursday. We got the Bank of Japan setting their policy rate. Probably the expectations is 0.75%. Last time was 0.5%. So they're going to hike rates a little bit. We got unemployment claims this week from the U.S. We got PMIs, which is a gauge on whether the economy is expanding or contracting. And you can see actually the previous two readings for services and manufacturing is above 50, which does mean that something in the economy is slowly expanding. It's not super drastic, but above 50 means we're expanding. And we got retail sales, which is the state on the economy. We got non-farm employment change, you know, how many jobs got added to the economy. We're not having a big forecast this time around, not like we did last time. And we have CPI. As you can see, this is actually, this came out today. This came out today, and the actual came in at forecast. So CPI is still like, oh, wait, this is Canada. Sorry. I mean, it is important, but less important. That was just Canada today. So this week for the U.S., we just have this right here, right? Unemployment rate is coming out, which the forecast is it's likely going to be higher than the last time. That'll be interesting to see. And yeah, so it could be a very volatile week ahead, but the biggest being the Bank of Japan policy rate. The Bank of Japan policy rate, that's the biggest event of the week. Let's see what happens. Currently, there's a lot of fear on the street about this, okay? About this. Here you can see a piece of more bullish news. So if you guys paid attention, since the last week that we met, the market did take some up moves, okay? It just seems that for some reason on Mondays, when we do this class, the market decides to go down. Maybe that's going to be a signal. We can create a strategy that we short the market every Monday. I'm just kidding. But it was a positive week for the market in some extent, because the the Federal Reserve just started their quantitative easing program. Now, they're not calling it quantitative easing. They're calling it reserve repurchase agreements, something along the lines, or reserve management repurchases. They're calling it something else than QE, but it's basically QE, right? And they're coming out with $40 billion worth of reverse management purchases or something along the lines. I forget what they're calling it. But you can see that this is kind of the projection of how they're going to be increasing their balance sheet from RMP and then cumulative bill purchases. So there's a portion of this that they have to, like, I don't know what they're doing with it. They're just buying back their own notes that are out there. But another part of this is they're actually adding also an additional, I think, $20 billion on their balance sheet. Okay, and that's already started. Yes, Falcon, the Tau halving happened today. Pretty exciting. But yeah, so we're back into this kind of quantitative easing cycle. Right now, it's always important that when we're approaching the money printer to see what happened last time, right? Because right now you have a big camp of people that are like, crypto is destined for another bear market. It's done this every time, blah, blah, blah. And it just becomes this like, I'm a genius. The market's down. Look at me. I'm bearish. And it's easy to be bearish when the market's down. You sound smart. But again, what's going to happen as a result? So what I have here is actually a different kind of chart, okay? Because we looked at what happens to crypto, or what happened to crypto when the Federal Reserve started expanding their balance sheet back in 2019. And what we saw a week ago was that actually crypto ended up going sideways, if not down, even though the Federal Reserve started to do some QE, right? That was interesting. The stock market ripped up to all-time highs, but crypto actually kind of stayed sideways and went down, which is actually kind of what we're seeing this week, right? Crypto sideways and potentially going down. We have a lot of our algos that are not participating in this market, which is very interesting. It's important to be on the right side of the market, okay? But look at this. So this has been a trade this year where gold has kind of exhibited a very strong amount of strength versus Bitcoin. And that's not usually typical when we're in these periods. You could see in 2021, which was 4 years ago, right? The 4-year cycles, we had a big sell-off from gold to Bitcoin. But this time around, we actually had a little bit of a bid. Gold has been stronger than its digital friend, right? It's been a little stronger than its digital friend. And it also looks like it's starting to break out, which potentially certain things are changing, right? Is gold going to be the trade of 2026 and Bitcoin is going to enter a bear market? I don't know. But if we look at the last time that the Fed went from quantitative tightening to quantitative easing, and then around here we had a black swan event. That was COVID. Are we going to have another black swan event this time around? I don't know. We could. It could be possible. If that happens, we know the playbook. They inject billions of dollars, if not trillions of dollars, into the market. And then we have another crazy bull cycle again, right? But you can see that when the Fed started to expand its balance sheet and then drastically expanded it, we saw gold sell off versus Bitcoin, right? So are we maybe seeing that potentially unfold here, where right now gold is catching a little bit of the preemptive bid, right? Where it like had a top here, sold off, started bouncing up out. Everybody here thinks there's a huge breakout. Gold's the best trade. And then you have the inevitable sell-off. Are we going to get into that again? I'm not sure. Currently, the momentum is favoring gold. But again, with QE, a new Fed chair next year, let's see what happens. Okay? But if gold is selling off with how much it's pumped already, imagine where Bitcoin could go. I don't know. Could it be 2, 4, 500,000? Probably, maybe. I'm not the one to ask. But now I want to go through this article that I read today about the AI bubble. Because again, there's a lot of fear on the street about, is this it? Is this the start of the bear market? Michael Burry is bearish, even though he's been bearish for like the last 3 years. Warren Buffett is at record amounts of cash, the spending, everything. Let's unpack it. Okay. Now it's interesting. So this is a Deutsche Bank highlight here. Okay. And this is them talking about the AI bubble. So it says If this is a bubble, it's still in its early stages. It was more than 3 years after. This was an interesting thing, right? Remember, history doesn't often repeat itself, but it often rhymes. Look at before the dot-com bubble burst, right? You had U.S. Federal Reserve Chairman Alan Greenspan warning of irrational exuberance in December of 1996. So you had people in 1996 saying the market is irrational, it's too expensive, the internet thing is crazy, blah, blah, blah. And then you had another 3 years of a bull market, right? And don't get me wrong, in those 3 years in 1996, there were probably sell-offs where you had a whole camp of people act real smart and say, hey, see, I told you the bear market started. In fact, the dot-com bubble was really two bubbles. One was lightly capitalized, never profitable IPOs. And the other was heavily indebted telecom companies that laid down fiber optic cables that remained dark for years, right? So the dot-com bubble had a whole bunch of technology that wasn't being adopted and a whole bunch of hype. Where if you look at this potential bubble and boom is led by well-established big tech companies with multiple revenue streams who are paying for their investment in data centers mostly out of free cash flow. Free cash flow means, hey, this money we made, where are we going to put it? What are we going to DCA? You know, and then these big tech companies keep DCAing more data centers and more AI investment and more NVIDIA chips, right? That's where their free cash flow. They're not going into crazy amounts of debt. Some are. We'll take a look at that. And they also have things that generate immediate returns from enterprise customers, and that is mostly on AI, right? So right now, the music is still on, the dance is still going, and things look pretty optimistic to me, right? So then they go through these things. Valuations. Valuations are at levels nearing historic peaks of the dot-com era. Don't get us wrong. The valuations right now are very high, right? We are valuing companies at extreme multiples. Right? We were also valuing companies at extreme multiples and the dot-com boom, right? So is this a risk? Are we potentially selling off? I don't know. But you see that the peak is at 44. We've passed 40. So it's like a lot of people are looking, scratching their head saying, is this it? Is this the top of the market? Look at that investment. Now, this is what's causing and driving this bubble boom. Stock market is at all-time highs. Everything is at all-time highs, right? Well, not everything. Obviously, crypto has been struggling. But you can see here, CapEx, capital expenditures, led by hyperscalers. Hyperscalers are Amazon, Google, Meta, Microsoft, Oracle, is forecast to exceed 10 times inflation-adjusted cost of Apollo program with no guaranteed return. Right? So they're investing all this money. They don't really have a guarantee if that's going to return the money. But remember, the market will stay irrational longer than you could stay solvent. Even though none of these investments might yield a return, we don't know if, 2026 is going to be bigger than last year because they're going to spend more than last year, and 2027 and 2028, 2029, and 2030. Look at how much we're spending. Remember, that spending finds its way back into shares, into the economy in some sort of way, with these injections of capital. Technology. This is, I think, a red flag. But technology, generative AI is flawed and may hit a wall. The tech is still prone to error and hallucinations, can be hard to apply at scale, and faces bottlenecks in further scaling. AI's rapid scaling may soon hit physical barriers, such as limits on how fast data can be moved between chips, some researchers say. Right now, basically what this means is you could see that AI was advancing at pretty, rapid rates, but since it's only getting incrementally better, right? It's only getting incrementally better, and they're saying, is it going to hit a wall? Do we have enough energy? Do we have enough storage? Do we have enough chips? We don't know, right? But could it hit a wall? It could, but I don't believe it's going to. At least not yet. And I believe in the human race, and we're going to figure things out, and we're going to continue improving. But yeah, let's see what happens, right? Let's see what happens. I just saw a really interesting interview this week with Elon Musk and the CEO of NVIDIA. And Elon was saying how the future of AI data centers is actually going to be in space, right? Because space has really good cooling and infinite energy when you look at the sun, right? And there's no like dark periods. It's very interesting. Um, but yeah, let's again. I think that we're going to continue innovating and expanding, literally, physically expanding into the outer space and things like this, right? Until we're done expanding, I don't think the market and money itself is going to stop expanding. But you can see here, this is kind of that weird web of money and valuations, and you got the U.S. government that invests $9 billion of cash into Intel, right? And then you got like Nvidia investing $5 billion into Intel. Intel gives up a 4% stake. Nvidia takes cash and invests it in other companies. Nvidia invests $100 billion in OpenAI, right, for some 6 gigawatts of systems. OpenAI then spends $38 billion on Amazon Web Services, gaining access to hundreds of thousands of Nvidia GPUs, right? Microsoft has invested $13 billion in OpenAI since 2019, right? So you got Microsoft going into OpenAI, and you got Nvidia and Microsoft investing $15 billion in Anthropic, who in return commits to buying $30 billion of computing capacity, right? Pretty crazy. And you got this like pretty crazy web of like investments, right? And we've looked at it before. This one's kind of laid out, I think, a little better, right? You can see here, OpenAI purchases $300 billion worth of compute from Oracle starting in 2027. Oracle buys 800,000 NVIDIA GPUs. Oracle to buy 50,000 MI450 GPUs from AMD. AMD buys 6 gigawatts of AMD GPUs and gets warrants to buy 160 million shares of OpenAI. And you just have like this interconnected web of like, here's 100 billion and I have 100 billion. So then I go and I say, hey, Larry, here's 100 billion for a data center. And Larry says, hey, that's great. We just got 100 billion. Let's go and buy a 10% stake in Intel. And Intel's like, hey, we just got 100 billion. Let's go and invest it here, right? And it's just like, it's this hot potato of all these billions of dollars running around. Don't get me wrong. These companies are making billions of dollars every year, right? So a lot of it is free cash flow. But you got this weird web. And remember, 100 billion from NVIDIA to OpenAI to Oracle to Amazon to Microsoft to Anthropic now is $600 billion of GDP with the same 100 billion. So there is this funky accounting. Funky accounting has always existed. This ain't nothing new, right? It's been around the block forever. The question is, can you be on the right side of the market to benefit from the boom, but protect yourself from the bust? Oracle CDs, this is a big red flag right now. You can see Oracle CDs are at all-time highs, or not at all-time highs, but basically since like 2008. And I got a really bad picture here. I should have gotten a more clear picture, but it just the way that it was. But Oracle CDs are, at bubble territory levels. Oracle has gotten so much debt. It's insane. And again, this debt can lead to a collapse of some sort. Markets are superorganisms drawing strength from every participant willing to play. They are humanity's first form of artificial superintelligence. As such, markets manage to outwit even the geniuses amongst us, right? It's very interesting. You got articles like this coming out from Zero Hedge. We're at the beginning of the credit destruction cycle. I've seen this many times. And could we be at the beginning of it? Of course. Of course we could be at the beginning of it. I don't know my head from my butt. Now, I want to believe that we got more bull market to go with a new Fed chair, an expanding balance sheet from the Fed, right? Because that's what history has kind of shown us. But we got credit default swaps on Oracle at all-time highs. Apparently, the market is buying a lot of insurance against all that debt, right? But this is kind of some of the the bullish side of things. So check this out. It's also from the same article here. The cost of the cheapest large language model with a minimum score of 42, that's like a huge benchmark that kind of grades how smart AI is, has decreased by a factor of 1,000, right? So look, like, and this is, again, this one thing you have to understand about technology, and the beautiful part about technology is that it's deflationary. So as technology becomes better and more efficient, it becomes cheaper to use. and more of us have access to the same tools that used to cost a lot more. And those same tools are a lot smarter. It's really cool. You can see here GPT-3 for $60 back in 2022. And now you got, Llama 3.2. I think this is 3 billion tokens, but it's all kind of relative and it's the same, right? Much, much cheaper. Decreased by a factor of 1,000. Okay. And you can see here that the usage of really smart reasoning models has now surpassed non-reasoning models, right? Which means that more and more people are using smart AI, especially as AI gets more smart and especially as it gets more cheap, right? It's pretty cool. So again, we're adopting AI. AI is getting cheaper and better and faster. These are all good flags, right? Markets want to see things expanding, growing, and that's what keeps it excited and optimistic. Look at that. Even now, fewer than 10% of US businesses are using AI. Business Trends and Outlook survey shows. You can see that we were under 4% in 2023. Now we're under 10%. Now it's growing, but it's not 100%, right? And maybe this crazy bubble takes until 100% of businesses are using AI before it's like, oh, okay, well, there's nobody else more to use AI. I don't know, right? And look at that. Prices for electronic components and accessories are surging amid boom in demand, right? So the fact that electronic components, accessories, the things that make up AI, that make up technology, right, they're booming this year. That means that a lot more demand has come in, so the prices elevate. Like when a lot more demand comes in for Bitcoin, the price of Bitcoin goes up, right? And the price of these electronic components are growing, which is showing there's demand, there's people investing, all of this stuff. Look at that. Gemini 3 exceeds all previous models in humanity's last exam, which tests reasoning and knowledge. Look at that. We got GPT-5 Pro, GPT 5.1, Claude, Gemini 2.5, Gemini 3 Deep Think just currently crushed all these other models on the same test they took, right? So what is this telling us? It means that AI is still getting better. And I think as long as AI is getting better, we can continue that wave of optimism. We can definitely continue that wave of optimism. And again, these are things that just recently came out. I've been hearing a lot of good stuff about Google. And apparently, Mr. Warren Buffett is buying Google at all-time highs, which is something very strange of him to do. And look at this. Booms and busts have become the norm. Bank of America breaks down the new bubble era. The AI boom is likely too big to avoid a bust, but timing becomes the biggest risk, right? Timing becomes the biggest risk. Look at this, right? This is when financial conditions tightened, right? That's the red dotted line here. And this was the bubble, the railways bubble of Britain in the 1840s, right? Bubble, bubble, bubble. Financial conditions tighten. And guess what? We go even crazier. This is the Dow Jones in the 1920s, right? Look at that. For another year and a half, we go crazy, right? Here's the Nikkei. This is the bubble that was in Japan, right? Financial conditions tightened. Boom. We expand. Financial conditions tighten. Boom. We expand in the 1990s, the NASDAQ, into 2000, right? And look at that. Now here we're at the Mag 7 in the 2020s. What's going to happen? I'm not sure. But all I know is we got to be on the right side of the market. Okay, I really like this piece from Tom Lee, who's the head of research and CIO of Fundstrat Capital. But he said tech companies are becoming bigger parts of our lives. So naturally, they're taking a larger share of spending. If you go back to 1930 and look at simple demography, every time population growth outpaced the increase in the prime age workforce, you've seen a technology cycle emerge. I'm going to read that again. Every time population growth outpaced the increase in the prime age workforce, you've seen a technology cycle emerge. We entered the third era of labor shortages in 2018, and it will likely last through 2035. That means technology spending isn't discretionary, it's a necessity. because there simply isn't enough labor available, right? And we covered robots a few weeks back in the ARC, right? And I pointed to why that sector and potentially what to look there could be only the beginning, right? And it's rooted a lot in the fact that we're short on labor. We need way more people than the people that we have, right? For everything that we need. And when I say we, I mean the big tech companies and everything they're building. Tech is now so central to the economy, especially under these labor shortages, that rising tech intensity gets mistaken for a bubble. In reality, economic necessity is driving it, right? So he's basically saying that we are not in a bubble. We're just seeing like the necessity for everything and how crazy AI is and everything. It's like it's a need, right? And these companies, they're growing their earnings, they're getting better. I don't know. There's a lot of camps right now. You got very bearish people out there. You got very bullish people. I'm a little more on the bullish side. I'm usually an optimist though, but it's important to stay on the right side of the market, and that's why we got to look at our algorithms. Now, I want to quickly show you if we are moving into a potential bear market, okay, which could be the case. I want to show you here real quick. Okay, so this is currently the short side of Gemini Bitcoin if anybody's in Gemini Bitcoin. Okay, now this is the short side from 2017. Okay, and you can see that from 2017, if you only took the short trades that Gemini Bitcoin gave, you would have still done a 263% return. It was not better than buy and hold, obviously, but this is just singling out the short side. Your max equity drawdown is 19%, which means you would have never lost more than 19% of your capital. It took 43 trades, and 39.5% of them have been profitable, right? And you can see here that, you know, this was the last bear market, and at least Gemini Bitcoin, which is currently in a short trade, was able to catch some of these nice downsides, right? Was able, inside of a bear market when the market's trending down, was able to catch some of this. It didn't catch every move. You could see there were some drops where it missed, right? Some drops where it got chopped out and stopped out. But since 2017, it's still averaged 263%. Now, this was recently, in the community that created these scripts, they showed their V4, right? Their version 4 that they're going to release really soon. And when you single out the short side on V4, you can see that since 2017, these are the better numbers, right? You have 1,176% compounded returns, smaller drawdown, so bigger return, smaller drawdown, some more trades that are more profitable, right? So what they've done is V4 takes V2, which is what we currently use. They skipped V3 because V4 was that much better. So we're waiting patiently on that release. But they build on top of these and they add more money management rules to that, right? You can see V4 is also currently in a short trade on Bitcoin. It's in a short trade on ETH. It's in a short trade on Cardano. And it is in no trades on Solana. But the part that they really always show is the returns from Bitcoin. And recently they just singled out and compared the same time zone from V4 to V2. And remember, when V4 comes out, we've been saying this now, V4 could take another month or two, right? But whenever V4 is released, all of our Leos, all of our Geminis that get upgraded will also go up to a 2 supernova per Leo and Gemini minimum. So if you want to get whitelisted into Leos or Geminis, no matter if it's Gemini Sol, Gemini ETH, Gemini Bitcoin, Leo Bitcoin, Leo ETH, Leo Sol, right? We have 6 options out there. All of them will move up to a 2 supernova minimum, okay? And that is because this is a huge upgrade in the strategy that we expect, okay? So V4 is coming soon. I'm just letting y'all know now that we could be expecting a pretty nice upgrade, hopefully by year end, maybe later. They're very careful on having a very clean rollout to smooth out all the bugs, all the wrinkles. And now I want to quickly look at how we're currently positioned. Okay, so we're going to look at the Leos, the Geminis, and stocks. Okay, and for anybody asking about Taurus, we're currently all in cash because all our are we getting the same signals even without the upgrade? Yeah, we're getting, as soon as we get the upgrade, the signals are also going to get upgraded. Now, I don't know if the stocks are getting upgraded. I don't know if it's needed. They haven't been focused on stocks. They've just been focused on crypto. But those crypto signals will get upgraded to V4. Don't worry about that. So this is how we're currently positioned. Okay, so Leo Bitcoin is currently out of the market. You can see it got chopped around and chopped out of some trades. Leo ETH also today got stopped out of its long trade on ETH. You can see that here. So we're currently in cash. Now, unfortunately, Taurus did take a long trade. It took both of these long trades, and we hit the stop loss there, but we're currently in cash and protected. Leo Solana, I mean, it's been out since the summer. It's just been very chill. Leo ADA, also out. That's just a signal only. And then Leo Bitcoin Bull Run, still showing strength. Got out of Bitcoin at 112 and has not entered since. So it's been very rewarding, to say the least. And I had some Bitcoin that I sold back when Leo Bitcoin Bull Run got out of the market. So I'm pretty happy about that. I wish I sold more, but it is what it is. Hindsight's 2020. But it's been nice to sit out a lot of this pain. And hey, if we have started a bear market, I'm glad because I have positions in cash right now, ready to buy back in at lower prices, right? And it's just taking that right side of the market. And Antonio, all of them are going to get upgraded. Signals, faults, everything. And that was Gemini Bitcoin, but just the short side. Here's Gemini. Here's our Gemini strategies. Okay, so we've got Gemini Bitcoin, which I was wrong. It's not in a short trade. Gemini Bitcoin is not in a short trade currently. Cardano, which is in a short trade. This is on our signals. And then we have Leo ETH. Well, Gemini ETH also got out of its long trade and is actually currently pending a short trade. So if price sticks around here, right, we might have a short trade later today at, let's see, at 7 p.m. That's my time and East Coast time. So 7 p.m., we might have a short trade on Gemini ETH. Maybe it's going to be another leg down in the market. And hey, that would be pretty nice to catch a little bit of that hedge. And here you can see Solana also fully out. We don't take the short side on this anymore. We're just doing the long side because the short side has not been doing well in this market structure. Okay. And finally, last but not least, we have stocks. Strategy is out of the market. Don't pay attention to this red bar. It just sometimes glitches out like that. It's currently out of the market. The only trade that we're in the stocks is Tesla, and we bought that a few days ago. And you can see that's currently roaring in the bliss at 8.9% gain. So again, even in a down market, we have we have Tesla currently in a bull trade, right? We have Tesla currently in a bull trade, and it's pretty awesome. Okay, 8.9% into profit. It's cool. All these others are in cash, and again, just chilling, sidelined, not nervous about where the market's going to go. Is it going to go down? Is it going to go up? Right? We've got this really nice position of power. FNGU got out way higher. TQQQ got out in October. We had IBIT also get out in October, and we have NVIDIA that also got out in November. Okay, so it took a small loss, but since NVIDIA has also fallen lower. And that concludes our, that's how we're positioned currently. As you can see, currently, all crypto on the vault side is out. Gemini ETH might get in a short trade later today. All our long side templates are out as well. And then we have also our managed vault quests for this month. Sorry, I have the wrong dates. This is just from copying and pasting. So our next Inside the Vault, when is our next Inside the Vault going to be? It is going to be on the 3rd, Saturday the 3rd. But I guess we're going to, so I know we got these 2 Saturdays off. So I think our Inside the Vault's going to be on 110. So I'm going to write until 1/9. So the day before is the last day. Whoops. Let's go. So what do we have? We have a $1,000 deposit aggregate into Vault on Enzyme. So if you guys have a supernova and you deposit $1,000 into a Vault on Enzyme, you get a ticket for that. This could be spread across multiple vaults. So you could do 500 here, 500 there. We got a $500 creation of a liquidity pool for any Vault token. You get 3 tickets per supernova for the liquidity pools you set up. If you do both of these, okay, so you do $1,000 deposit and $500 liquidity pool, you can get, instead of 4 tickets, 8 tickets. So you get a 2 times multiplier. But that only applies to our flagship vaults, which are Leo ETH, Gemini ETH, Leo Bitcoin Bull Run, and Scorpio 5. Okay, so if you do it for those, you get a 2 times multiplier. You have a $100 Uniswap buy. So if you buy $100 of tokens on Uniswap, you get a ticket for that. If you hold a supernova, and you have to hold different supernovas for different quests. Remember that. $1,000 deposited Taurus gets you a ticket for a supernova. We have a supernova AUM match. That's 1 ticket for every $10,000 of AUM that you have. And then we have also the big bundle that was presented this weekend for Saturday school. Inside the Vault, we have a bundle of supernovas. Any bundle purchase this month is going to get you 10 tickets into the next $1,000 raffle that's going to be on 1/10. Okay, so make sure you buy your bundles. I think the deal is until, I think it's been extended into the end of the year, or at least until Christmas. So if you've been wanting to get more supernovas, go for it. We do have 10 tickets also for those supernova bundle purchases as well. And if you buy supernovas off OpenSea, I forgot to include that here, you do get one ticket for that if you buy supernovas off OpenSea. Okay, I think last month we were doing 2 tickets. This month is just 1 ticket. And that's everything. That's everything that I had planned today. We got 12 minutes. If you guys want to ask me some questions, now's the time for it. Or we can wrap it up early. Throw it in the chat if you have a question. What I need to do also is I'm going to open up the deposit for Leo ETH and Gemini ETH. And you definitely, if you want to DCA those, you want to get those in because, well, we have a short trade pending until 7. So you'll have between now and 7 o'clock. So like 3 more hours before we might have to close those deposits again. Okay, so just letting you know that right now. So I need to open up the deposit for Leo ETH. I mean Gemini ETH. I think Leo ETH is already open. Oh, no, it's not. It is not open. And Antonio says Elon's $1 trillion pay package. Yeah, I guess it got approved. But it's cool. Part of that pay package means, Elon's got to multiply Tesla by a few times. He's got to get a valuation. I forget to what it was, but he's got to grow the company by like 2 to 4x or something, maybe more. So it still benefits us if we're trading Tesla, which I definitely am. What do you think the Gemini Bitcoin didn't hop into short? Gemini Bitcoin, hold on. I'll show you something. So this is Gemini Bitcoin on the short side in 2017. And you could see that there were a few times where it had missed short trades, right? Like there was this spill right here where it missed a short trade. And there was also this spill right here where it also missed a short trade. So it happens. It really happens. Catherine says, which would you deposit into right now, Leo or Gemini ETH? If I had a little bit more of a conservative attitude, I would throw it into Leo ETH. If I had a little more of an aggressive attitude, I would throw it in Gemini ETH. Because Gemini ETH is going to take more stop outs, right? So like, for example, I'll just open up my trading view real quick. Wait, and before I open up trading view, I wanted to, I'm just going to go ahead and open up those deposits so I can do it like as I'm talking about it. And then anybody who wants to deposit can just go ahead and do it. Yeah. It's not a great time right now. And the Leo and the Geminis, they've taken a lot of fake outs. But rest assured, they're managing the risk. All right, Leo ETH, deposit is open. And Gemini ETH, let me make sure that deposit is also open. And I'll make sure after this call, I'm all caught up on white lists in case anybody got one in. So if you can't deposit, just check within like an hour or something. Yeah, deposits are open for both. All right, cool. So what I was going to show was oh wait, no, I think Gemini. Hold on. No. All right. So yeah, Gemini Bitcoin hasn't really taken many short trades yet. Is the short side turned on? No, this is Leo. Yeah. Yeah. So here's the short trades. You can see it got chopped out of a few. Okay. The last profitable short it took looks like was in sometime in 2024 before this move. And then here's all the trades. I'm just looking at Bitcoin here. All the trades here. Now we had a question that was saying, hey, is Leo ETH or Gemini ETH a better one to invest in? Well, that's all up to your risk management or your risk profile, you know? Now what's cool about Gemini ETH is over time, it does seem to compound better because it takes short trades that then grow the equity, right? It takes short trades and it can grow this equity while the market sells off. And then it can take all that profit and compound it into the long side. But also, what we also saw from Gemini ETH is it can take these short trades that get faked out and it then gets into deeper drawdowns, right? So do realize that you can see here Gemini ETH, right, does have the potential. And this was just from the beginning of this year. Look, from September until February. This is from high to low. It's a different drawdown than equity drawdown because equity drawdown is just looking at the wins or really the losses that your profit would take. So you're not taking as many, on Leo ETH, you're not taking as many trades. Okay, so that's what's nice. So you're kind of chilling there and, like right now you got out of a long trade here. The last time you got out of a long trade was here. So all throughout this fall, right, 24%, 36% at the extreme levels, you're just chilling. You're there in cash. I personally like to balance my Leo and Gemini holdings. So I'm kind of more on the long side than I am on the short side. It's nice to have a little exposure to the short side because then if the market falls, right, Gemini can get in there. And the reason why the share price of Gemini was higher is because we launched Gemini at a pretty good time around March, and it was able to kind of catch some of these short trades here and take more profit and compound it into the next. But since it's actually kind of given back a pretty nice amount of profit because of these trades that got chopped around. So the short side can work for you. Sometimes it can work against you because you're taking more trades. Okay. So it's really up to your risk profile. If you don't mind that the market is falling and you're just sitting there in cash, okay, go into Leo ETH. But if you want some action and you want to like participate on the short side in case we are in a bear market, in case, you know, this was sustained momentum and we were going to crash and fall like we did in April, you know, go for it. Go for Gemini. Antonio says, what LPs are you doing? I am currently in 3 LPs. I'll show you that as well. So here we are, portfolio. Oh, Connect Wallet. Where are my pools? Your positions. Yep, I'm doing ETH Leo, ETH Gemini, and Wrap Bitcoin and Scorpio 5. You can see that I got almost, what is that? $5.72. Oh, and that's just counting my ETH. So I've got about $10 of fees on all of these. I've had these pools set up for a pretty long time. 24% APR here. That's really nice. And that's my ETH and my Leo ETH here. And then I got my Gemini ETH and my ETH as well right here. And I've got my Wrap Bitcoin and Scorpio 5. All right. Look at that right there. $6 of fees. I got about $10 on each of them. If you look at if you just round it up. But yeah, those are the liquidity pools I'm in. I would just do it for our flagships right now, to be honest. Let's see. Yeah, they're working on NFT staking, so don't worry. That should be launched by Money Monday tonight. What is Taurus considered? Conservative? I would consider Taurus like a blend because we recently started using Gemini ETH in Taurus. We only use it with half of the portfolio. Okay. So it really gets only half of the risk for Gemini ETH. But that's because we're utilizing that portion of the portfolio to, you know, in case the market does fall and crash, we have some part that is growing in a declining market. And then also in Taurus, we do, Antonio, I was up like $10 because I wasn't that I don't have to go to it right now, but that was just showing you the ETH side. And then I also had fees in Scorpio 5 and Leo ETH and Gemini ETH. But yeah, my what question was I answering? Oh yeah, Taurus. Yeah, and we also do some discretionary movement in Taurus. Like we just got out of a link and a tau position. We risked a very small percent of the portfolio on that, but you know, it does give us the flexibility to go into some more altcoins. And we're big believers in Chainlink, and we're big believers in, you know, tau, especially because they just had a halving event. You know, so we will attempt to take very small positions with managed, you know, stop losses, and we've got people around to cut those trades. And we do that with about 20% of the portfolio, 80% on Leo Bitcoin Bull Run and Gemini ETH. Okay. All right. Well, it's time. It's 4 o'clock. I think I got through all the questions here. Ripple news. There was definitely some news about Ripple, but we don't talk about Ripple here. This is Market Monday for the managed vaults. Cool. I got through all the questions. Thank you guys so much for being here. I will see you on the next one. All right. Cool. And definitely get those bundles, those supernova bundles that we got going. It's going to be, I think, until at the earliest Christmas or the latest the New Year. Okay, so get yourself some supernovas. It is getting you 10 tickets into the next raffle. So you can win just like Ron did this past weekend, $1,000. Ron got himself 1,000 big ones, and he got those bundles on the call. So get your supernovas while they're still this cheap. Because trust me, when V4 comes out, and if it's anything like what we hope it is, and people see the value of everything that's being built here, you could say goodbye to 3-digit floor prices, and we're going to get to thousands, if not tens of thousands of dollars per supernova. So, yeah, but you guys enjoy it, man. Have a good one. Peace out. See you, Ron. Ron is the big champion, guys. He's got the big belt, like the wrestlers and the fight.